So right here on Tesla, when I talk about a gap up, this is what I'm referring to, and we'll spend more time looking at some of this. But if I go to the bar replay, and I don't know what the markets are going to do tomorrow, but I know that this is one of the things that could possibly happen. So you just have to know what the chart patterns are. You kind of think ahead of what may or may not happen. It boils down to, we know that the 10 moving average is resistance on the S&P. That's right here today was confirmed. For at least right now, it's resistance on that index. So all we need is some kind of a bearish candle pattern. I can't predict exactly what it's going to be, but I can go through some of the variations. And in the trend trading DVDs, I give you all of the entry patterns. It could be a gap up and then a breakdown. It could be that the market's open flat and then break down on the second candle. It could be a rectangle in the morning and then a breakdown. It could be all sorts of different patterns. One of the patterns that we sometimes see and fairly often at a turning point around a moving average is exactly what we saw in Tesla this morning, where the first 5-minute candle did gap up. And you see on Tesla, it wasn't a gigantic gap up. And when you look at the daily chart, it wasn't trading at the 10 moving average, but it was trading around a 5 exponential. So Tesla gaps up. You let the first 5-minute candle close. Now watch, and I'll do just the, oh shoot, I moved ahead too fast. Hang on, I was going to go forward and I'll do the playback. There we go. Minute by minute. So here's our first 5-minute candle this morning. I'm going to change the playback so we'll see this develop 1 minute at a time. I don't like trading, let's see if I do this. I don't like trading in the first minute or first 5 minutes necessarily. I like it when we get more confirmation. So we have a gap up, we have a sell-off. The next minute in, the S&P is already dropping. So you're 7 minutes in right here, and the S&P has been pushing, S&P and the spiders, pretend this is the S&P, right? This is Tesla. But if it's pushing down lower beyond that first 5-minute candle, that is a bearish entry. Making any sense? The idea here, to boil it down, this is Tesla was a stock that gapped up when it's already in a downtrending pattern. I don't know if this can happen on the S&P tomorrow, but if it does, you would trade it like you would below that first candle body. Yeah. So it looks like I lost my audio connection for a second. Let me just say that again. What we're looking for here, we know that just statistically speaking, I guess one of the patterns that may happen after a stock or with a stock in a trend is when it's in the middle of retracing and we're 2 days into the retracement. Retracements are usually 1, 2, or 3 days. So sometimes if you get that third day of retracement, what will happen is you'll have a gap up. So a gap against the trend. It's a downtrend so far on the index. It's a downtrend on Tesla. If it gaps up, you don't want to get sucked into that buying pressure and that happy euphoria that may be there for 30 seconds. You want to think daily chart is still bearish. So use that as a place to buy your put options. Rather than just arbitrarily saying I'm going to buy puts below today's close, sometimes if the stock gaps far enough up, you can actually buy those puts at a higher price point, which means your put purchase is less expensive, right? That's where the 5-minute chart comes in and helps us, when we're using the 5-minute chart to help us get better fills on our options. You don't want to use the 5-minute chart to get you into trades later than you would have by just using a contingent order. Does that make sense? So you want to try to get in earlier, ideally. So Tesla is just an example of that, where it gapped. Now, the thing with Tesla on the gap up, it gapped up, and within the first 5 minutes, it had already mostly filled the gap. So it's not like we would have been buying puts for a lot cheaper, but it just gives us the confirmation that this is a trade to do. And these guys here in class this morning went in and bought puts here on the second candle, probably about 8 minutes in, right? I like anywhere after the first 6 to maybe 7 minutes, because I find that sometimes after that first 5-minute candle is formed, every once in a while you get a weird little spike one way or another on minute 6, into 6 minutes into the market. I don't like trading that, so I usually wait until that 6-minute candle has closed, and then we're into that 7 minutes into the market, and that candle is usually what I'm trading. So you want to, let me back this up and show you. just if I do the replay, make sure you do this a lot, because I find it really helpful to go back and back my charts up and walk forward and practice and back it up again and walk forward. I would do this hour upon hour upon hour when I was a new trader, and it really was what helped me finally see the patterns. I would find a trade and a nice move that I had missed, and I would back the chart up to before the move. Because obviously we can all recognize it after it's made a good move, right? That doesn't help us make money. So your job is you've got to see how the big setups to the big moves, you've got to see how those look before the stock has already moved. The only way you can do it is by doing this. Back your chart up, because it looks very different here than it will look in about 15 minutes on this chart, right? From here, this timestamp here, to 15 minutes into trading this morning, it was a very different looking thing. So backing it up, the first 5 minutes on Tesla, gap up, and then it's almost filled the gap. Okay, so we see that. It's bearish. And a lot of volatility, by the way, up and down. You see a long wicks on either side. So I go forward the next minute. This is the 6-minute candle that I'm talking about, where sometimes you'll see it drop, and then you'll turn around and see it spike up, and this stock could be super bullish the rest of the day. I have found, in my experience, there have been too many head fakes on that 6 minutes in that I don't trade that. These are things that may change over time. Maybe we'll get to the point that we don't have head fakes like that. But we've had enough that I don't trade there. It's the next minute. So after this closes on the next minute candle, if it's going lower, that's a place to buy puts. And you could see what I usually do is have the 5-minute chart here and then a 1-minute chart above it. So I can see the first minute and then the next minute. So here, I'll go forward again. And notice I'll push lower, so that's 7 minutes in. Somewhere in that candle, you can be buying put options. And anywhere there, or the next couple minutes. But this is the breakdown. So you're still getting in pretty early in the move. You're getting in on the second candle, and you're in to take advantage of this momentum before it looks super clear. Let me change the playback to 5 minutes. Right? And then it started a great downtrend. So we looked at this here in class. There were a couple of different day trades. But just to show you, I mean, at this point, you go a few minutes in, and it was a very different picture over in here, right? After it had been trending down, you go in 15, 20, 25 minutes into the day, it looks really bearish. Where you're going to make your money, obviously, is if you're jumping in over here. So I want you in on that second candle where you're still in near that turning point where the stock is breaking down. Because if you're only recognizing it down here at the lower levels, you're often in before retracement. And then, are you going to hold through this retracement? I mean, those are some pretty big green candles. I probably wouldn't if I had puts. And then this is the kind of thing that you could find yourself stopping out. And then here, I'll just go current. Well, those are the kinds of patterns right there that you could end up stopping out only to see this stock break down again and have another really big downtrend. Have you guys ever done that? Buy puts somewhere over here, let's say, stopping out over here, and then sit on the sidelines just to watch it do this. I have. I did quite a bit. I realized that doesn't work. And it's okay if you have a trade that doesn't work and you stop out, as long as you're looking at getting back in if the chart is there. But I wouldn't even do that because I'd be so shell-shocked that I just lost money on a trade that made sense on the daily chart, and I'm just trading too, my entry was delayed, and I was trading too fast. So I had a delayed entry, and I wouldn't give it time to play out. Those things never work. And this goes to my point that I will often say, you work on the entries, because if you have a really good entry, I really believe a lot of times the exit will work itself out. But the entry is everything. Because if you're over here and you're buying puts somewhere on that second candle, even the beginning of the third candle, you're in a good spot, right? Even to hold through this retracement, mentally it's easier because at least you're just dealing with profit and not your capital that you put in. Everything about that emotionally is an easier, better trade. So to me, it is all about the entry, and then you add that that next piece, which is the exit, but it's got to be entry first, because you can do so much more with a good entry than a trade if you've had a bad entry. Your emotions are going to be all wacky. It's hard to turn that into a good trade, and your losses are going to be a lot bigger than they should be. Now, while I'm on Tesla, notice how it closed. I really, really like this Bollinger Band pinch at the end of the day. And looking at Tesla on the daily chart, how does it look here? Bearish, right? Since Friday was a bounce day, and today the fact that it closed as a bearish engulfing candle, we basically had one retracement day. This looks like it's making another leg down. So this actually would be a stock that if the S&P rolls lower, this needs to be one of our bearish candidates for tomorrow, don't you think? Because what we'll be looking at is buying put options below, and you could do this. You could look at a bearish breakdown below the lower band there. That's at about $208.31. The other thing that you may be noticing, this stock is also in kind of a triangle pattern, and it was forming higher lows. You'll also notice at about $208.60, there's a tweezer bottom there, the last two candles of the day. So this, a break below those tweezers, because that's recognizing some support, and so a break below those tweezers could be a place to buy put options. So this is something where you could scale in. It's all right. If the S&P is bearish tomorrow, and if Tesla's breaking down, why not look at puts below the tweezers and maybe another bearish entry below the lower band? Sound good?